just held Argo Infrastructure's 2024 annual general meeting, and I'm joined now by our Managing Director, Jason Beddow, who's going to discuss some of the key themes influencing global listed infrastructure currently and the outlook for the asset class. Jason, why have rapidly rising interest rates impacted infrastructure in particular?
Look, main reason is they generally carry a lot of debt. I mean, these are good businesses. A lot of them have regulated revenues, so it's not at risk. Particularly utilities, electricity, water, gas. I mean, the profits don't move a lot, so by nature they generally carry a lot of debt. And while these companies have been very good at terming their debt out, which is extending the debt over maybe 5 or 10 years, and there's not an instant impact on the whole lot of it, there's still a meaningful interest rate impact on the cost. That can sort of, flow through to the bottom line, can maybe restrict dividends. The second part is a little bit more technical, but how these stocks are valued using valuation methods, using a cost of debt in an NPV or a DCF, is by increasing the cost of debt, you actually lower the value of the company because you put that into perpetuity. Now, of course, interest rates have cycles. So what we clearly saw through the period of interest rates going up was a lot of pressure on infrastructure stocks, particularly utilities. They make up a big part of the index. So, that has put them under pressure. But subsequently we've seen, we had anticipation of interest rate cuts from the US. Now, initially we've seen that in September. Infrastructure's posted at a global level, probably had its best quarter for, 2 or 3 years. So I think the thesis that, in a falling interest rate environment, there's some tailwind for infrastructure REITs, any sort of asset class that has long life but carries extra debt. I think that's playing out. And I guess if we think about, the Fed projections or forward curves, we're in an interest rate cutting cycle now. It may not be super deep, but we should have support for the sector maybe for at least 12 or 18 months.
And the global economy has avoided a recession so far, at least. It seems to be on track for a soft landing. In periods of slower or slowing economic growth, global listed infrastructure tends to outperform broader equity markets. Do you think it's a good time to be investing in global listed infrastructure now?
So, well, we think it is. There is, global infrastructure, or just like infrastructure generally, has often traded at a premium to equities because of the nature of the businesses. They're at quite a big discount now. I guess what has changed or will change is within infrastructure, there's very different. There's the utilities, which we've mentioned. There's also airports, data centers, which we might talk about. Electricity. So there's a number of things, and they do behave a little bit differently. But generally speaking, we would expect that they do better than general equities. But again, that's a little bit nuanced because technology stocks have been the flavour of the month, and again are probably the best performing stocks. So when we're comparing infrastructure, I think if we talk about more general equities, I think that holds true. If we're talking about potentially are they going to do better than the Nasdaq, I think we need to be a little bit careful.
And so infrastructure stocks do tend to be, or at least are understood to be, quite mature businesses with defensive characteristics. But there are some areas of the global listed infrastructure universe, some subsectors where there is actually really, really strong growth. Can you talk to some of those? Yeah,
look, I think there's multiple actually. I mean, clearly the obvious one and what's getting the market's excitement is data centers. We see the number of data centers that are being developed. On the back of AI, the demands for further data centers. But flowing on from the back of that is, electricity demand is rising again. So not only do we need, more renewables to move to decarbonisation targets, we also need more power generally, whether it be gas initially in a transition or the transmission. That comes back to infrastructure companies, and they will have opportunities to invest and get returns on capital. So that's, gone from an industry that had pretty flat per capita electricity demand for the last 20 years. That's now growing. And then even with supply chain dynamics, China's been such a manufacturing hub for the globe. So clearly Chinese ports and others, but as companies and countries are looking to diversify supply chains, there'll be additional, we think, port infrastructure in different countries that'll require different either road or rail networks. Now, clearly a lot of countries are not advanced enough to have private infrastructure. So maybe initially it's government infrastructure, but in time, maybe that becomes opportunities for public markets. So, I think there is some exciting things out there.
And in addition to those key trends, what are some of the other medium to longer term trends that are shaping the outlook for infrastructure globally?
Well, I think those three are three. I also think, just westernisation of a developing world. We still have South America, we still have Southeast Asia, we still probably have parts of China, and certainly Africa, which may well be decades behind. But there's still 5 billion people in the world that still probably have aspirations for more of a Western style lifestyle, and at least from an infrastructure perspective. So there's a lot of money to spend, overlaid with we've got the decarbonisation, we've got data centres, and we need more energy. So there's a lot to be spent. The challenge is, I guess, how is that funded, and how is it funded a mix between government and private investors? When private investors demand a return.
Thanks, Jason. And thanks so much to all our shareholders who attended our annual general meeting today in Adelaide. We'll look forward to seeing some more of our shareholders next year when we hit the road for our national roadshow in May.